All right. Hey there, everyone. Thanks so much for jumping on the call today. Really appreciate it. This is everything you need to know about a Roth IRA. And so my name is Sean McKay, and this is an American IRA, self-directed IRA presentation. So we'll use the term today, Roth IRA and self-directed IRA interchangeably because they are the same retirement account. So really the self-directed concept just simply means that you can use your retirement account to invest in what are considered alternative assets. So real estate, precious metals, private companies, et cetera. So the Roth IRA itself, whether it's with a quote unquote self-directed IRA provider, or it's with your financial advisor, or a do-it-yourself equities company like a Fidelity or a Vanguard, the retirement account itself will have the same rules, regulations, and fundamentals associated with it. So again, we'll just simply use the term Roth IRA, but it can mean self-directed Roth IRA as well. So at American IRA, we are considered the record keeper for your self-directed account. And so we have incredibly low fees relative to our colleagues in the industry. We are set up very differently in that we're not just trying to bring in as many retirement accounts as we can each month. We want to make sure it's a good fit for the client, for us, that they understand the rules, the regulations, what they can and can't do with these self-directed accounts. And so I think we got a great blend of great fees, a great team to support you and your retirement account. And so as you can see online, we have a tremendous amount of positive Google reviews, Better Business Bureau reviews, fill in the blank with the platform. We're very, very fortunate to have a phenomenal client base that's willing to share their positive stories with everyone. So today we're going to specifically just break down the Roth account, the tax ramifications, how you can qualify to open and contribute to a Roth if in some cases you may make too much money to directly open and contribute to a Roth IRA. And so we'll just break down what you can do if you're fortunate to be one of those higher income earners. And so we'll start with the eligibility to open and fund. So as is the case with the Roth or any retirement account, you need to have some sort of earned income to make contributions to the account. And so most typically that's going to be a W-2 or a 1099 type of scenario. So you're working for some company and they're paying you regularly for your services. So you're going to qualify. Unfortunately, if all you have is something like disability or Social Security, that will not allow you, based on those elements alone, be able to contribute to a Roth IRA. You'll also need to provide some sort of identification. So that could be a passport, that could be a driver's license, et cetera. But you're going to need to be a U.S. citizen or someone that is living and working in the U.S. with the appropriate documentation as an individual that's kind of compliant to live and work in the U.S. Now, in 2022, the contribution limits for a Roth IRA are $6K. So you can put up to $6,000 if you're under 50 years old. If you're 50 years old plus, you can contribute up to $7,000 into that Roth IRA. Now, certainly in order to max that contribution, you have to have that much, at least in terms of earned income. And so, for example, if you're just working part-time and let's say you make $4,000 in that year, then the most you would be able to contribute would be $4,000. If all you make is $4,000, the most you could contribute is $4,000. Now, as I mentioned earlier, there is an income restriction. So if you make from, as you can see from this chart, if you're a single filer for your tax return, if you make less than 125K in modified adjusted gross income, so that's a calculation that your CPA can help you with, you can make a full contribution to your Roth IRA. From 125 to 140, there's kind of a phase out concept. So up to 125, you can make a full Roth contribution. Ending at 140K, you're not going to be able to contribute any money as a single filer to your Roth IRA directly. So again, we'll solve that problem at the end of this presentation. Now, if you're married filing jointly, that ranges from 198K to 208K. So you got a little bit more breathing room if it's a couple that both has earned income. What's also interesting about these retirement accounts is there's what's called a spousal contribution. So let's say that one of the individuals is working, let's say they're making $80,000 and the other spouse is not currently working. Based on that $80,000 of income, that individual would not only be able to make a contribution for themselves, but they'd be able to make a spousal contribution for their spouse, so their husband, their wife, etc., for their retirement account as well. So that's pretty cool. So how do the taxes work on a Roth IRA? So the Roth IRA is one of the few what we call tax-free vehicles. So it means that you're putting money into the retirement account, and in doing so, it is after-tax money. So you are not going to get any sort of tax benefit for putting money into the account. Conversely, other accounts like traditional IRAs, you're putting money into the account, and in most cases, you get a tax benefit for the money that you put into the account. So it actually lowers your tax bill relative to how much money you've contributed to the account. So with these accounts, the money that you put in, assuming that it is seasoned in the account for 5 years and you're 59 and a half years old when you start to take the money out, that distribution will be considered a tax-free distribution. So if you take, let's say, $10,000 out after 5 years and you're 59 and a half, that $10,000 comes out of the account, goes to you personally. You don't pay any taxes or penalties on that money. Now, the money that you have personally contributed to the account, you can always pull out at any point in time without any taxes or penalties associated with that. Now, with the Roth IRA, it is one of the very few vehicles where you don't have what's called an RMD, a required minimum distribution. So with pre-tax vehicles and with employer-sponsored concepts like a 401k, they tell you in your later years, you have to start pulling at least a certain amount of money out each year to do whatever you please with so that the government can get their revenue stream from the taxes that you have the privilege to pay for having that retirement account. So ultimately, it's a unique vehicle because it's a tax-free vehicle, unique because of the no RMDs, and also unique because the money that you put in, you can always pull out at any point in time. So now again, if you are fortunate to be one of those higher income earners, the conversation that I have almost daily is an individual says, my income is too high, so of course I can't have the Roth IRA, but I do have these pre-tax vehicles. Now, it may make sense for them to just simply keep their pre-tax vehicles, but I want us all to be aware everyone can end up with a Roth IRA if they so choose. So the way that that works is you're absolutely correct. If let's say you make 300K in a year, modified adjusted gross income, then you need to either contribute to an existing pre-taxed account like a traditional IRA, if not open and fund that pre-taxed traditional IRA. Step two is you convert that capital, that cash, from a pre-tax vehicle to your Roth IRA. So with some firms, it's a couple of buttons on an online concept. With other firms, it's just a very simple documentation that you fill out, instructing that provider to change that, let's say $6,000 that you just put in the account into $6,000 into a Roth account for you. So this allows everybody to ultimately end up with that Roth vehicle if they so choose to do that. So that's really interesting. And again, unfortunately, that's something that is not widely known, really even in financial services. I'm consistently surprised by how many advisors are unaware that all of their clients could make Roth contributions if they're willing to take that extra step and contribute to a pre-tax, turn around and do that conversion to that Roth IRA. So as far as the contributions, as far as the way these accounts can be structured, there's a totality with these retirement accounts, with these IRAs. So it's very common individuals might have some traditional IRAs, they might have some Roth IRAs, they might have a few different traditional IRAs at different places, a few Roth IRAs at different places. And so they're wanting to know how much they could put into these accounts. So again, the $6,000 and $7,000 contribution limit is the contribution limit amongst all of these traditional and Roth IRAs. So what that means is if you have two Roth IRAs, one with, say, Vanguard and one with American IRA, amongst those two Roth IRAs, you can only contribute up to $6,000 total. So it's not $6,000 to Vanguard and $6,000 to American IRA, some combination of the two. It could be the entire $6,000 to Vanguard or to American IRA. It could be $3,000 to one, $3,000 to the other, 1 to one, $5K to the other, whatever makes sense for you. So if you have a traditional IRA, and let's say you've contributed $1,000 to that traditional IRA already, you're 40 years old, you want to get the remaining 5K somewhere, you could put 1,000 into the traditional and 5K into the Roth IRA. So hopefully that makes sense. You can mix and match. You can have as many accounts as you want, all in, complete total. You're still limited to the 6 or 7K respectively. So hopefully there was some value in there for you today. Definitely feel free to check out, we have 2 YouTube channels. So this would land on the American IRA LLC channel. We also have a channel that's geared a little bit more towards investment concepts. So you get to hear the good and mostly the bad deals that I do, whether it's real estate related, equities, markets, etc. And that's at The Lousy Investor. So that's LOUSY Investor. So again, hopefully we can connect on those platforms. And if you're interested in a self-directed Roth IRA or any self-directed account, please feel free to give me a call. My email is Sean, SEAN, at AmericanIRA.com. And our office number is 828-257-4949. So again, really appreciate everyone today. And hopefully we'll see you again soon.